Good morning from Chicago, the risk management capital of the world. I'm Alan Nuckman here at the CME Group with the Morning Market Stir for Wednesday, December the 14th. Fed Day is finally here. But first, yesterday, new all-time records, and this time across the board. The NDX decided to play ball, taking out those October 25th highs, led the day yesterday up 1.25%, now a respectable 7.5% positive for 2016. The S&P and the Dow continued their ways. The Dow was up 0.5%, now 14% higher in 2016. Who would have thought? And the S&P broad market yesterday up another 0.5% to total 11% so far year to date. Looking at other markets, crude oil was quiet after this surge that we saw to start the week. It was down 10 cents yesterday, only a $1 range between the high and low, closing at 53. Gold was down $5 at the 1160 level, and importantly, bond bounce held and actually was positive on the day after the key reversal that we saw the day previously. So after the positive action of stocks yesterday and the Fed meeting today, where are the markets this morning to start the trading day? Well, right now we're steady. We got the E-mini S&P down 2, the NASDAQ up 2, and the Dow futures down 15. The Fed meeting is this afternoon, the announcement of a rate hike. Now, there's a 95% chance, according to the CME Fed Watch tool, that it's going to happen, but it's a done deal. And looking out further, there's about a 50% chance there'll be another rate hike by June. So we'll have to wait to see how that follows through with the language from today. Looking at the other markets, currencies are quiet. We've got the dollar index below 101, has not made new highs in a couple of weeks in that dollar, which was at 102 back on November 24th. The euro currency back to the 107 level, and gold right now is down a couple bucks right now, actually up $5, 1164. Crude oil down $1, giving up the gains after the pop that we saw over the weekend. So right now, crude's trading right about $53 per barrel. So the focus is on the Fed and looking at treasuries. Right now, the bond market is bouncing once again up a full point. We've got the yield on the long-term treasury, the 30-year, back below 3.1%, which is significant, building on that key reversal that we saw earlier this week. So to summarize, with half an hour to go before the cash stock market open, stock index futures are steady, and all eyes are on the Fed. Right now, E-mini S&P down 2, Dow futures down 15, and now the NASDAQ's turned lower as well, off 2 points. Alan Nuckman here at the CME Group, where it all comes back to commodities.